Hello, everybody. Welcome to the fundamental analysis this evening with AvaTrade. My name is Troy. I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like we're up and running. If anyone has any issues as we go along, please just let me know. As we get going, keep in mind a couple things, as always. We should understand that there's risk involved with any trades that you make. Obviously, no one trade is guaranteed to profit. That's why you should manage your risk in a way that makes sense for you, whether you're using stop loss marks or using our award-winning app, AvaTrade Go, which has a special risk management feature called Ava Protect, which that feature is also available on our web trader, by the way. So those can trade right on top of your MT4 and MT5 accounts. So if you haven't yet, you might check out the AvaTrade Go mobile app and our web trader and take a look at the Ava Protect feature that is there. It can work as part of a risk management plan. Now, the other end of that statement, the fact that each and every trade has risk, each and every trade also has the potential for nice profits, which is obviously why we're all here to go after the profit side of things. But you have to keep in mind the risk side and make sure you manage things appropriately. As we go over from an educational perspective, some ideas and concepts with fundamental analysis and throwing in the technical analysis for looking for opportunities that you potentially might be interested in. Keep in mind that that's not meant to be taken as financial advisement, but is coming from an educational perspective. Now, real quick, what is fundamental analysis before we look at the actual headlines? Well, one thing is it's headlines. It's news that's breaking around the world. And when we do fundamental analysis, we're looking at those headlines. We're looking at the stories that are coming in. We're also looking at what we might call regular economic events, which we'll look at a few that rolled in today and that will be coming in later tonight out of China. Regular economic events could be factory production numbers, GDP numbers, those types of announcements that we know exactly what they'll be and when they'll be for which country. Those are a little easier to plan for in terms of scope and timing. The other type of fundamental news is more of an extraordinary type of situation where you don't know what kind of headline might hit or break. Last week it was the Suez Canal being blocked by a ship that got turned sideways. Who would have guessed that might happen? And that day oil shot up more than 5%. Okay, so you have to be ready with your risk management plan for both types of fundamental news to affect the movements on the charts. And we go over ideas on how to prepare even for the unknown, even for a ship that turns sideways in the Suez Canal out of nowhere, with pending orders, buy stops, sell stops, past resistance levels, support levels, to be ready for breakthrough movements. That day when oil climbed over 5%, a lot of traders who had their buy stops waiting just above the resistance levels made nice profits. And they didn't know that that headline was coming, but they knew one could. And that's the idea with the extraordinary economic events. You can prepare for them without knowing exactly what they'll be. Okay, use your technical analysis to prepare for fundamental news that could come at any time. And in the past, it was headlines about Brexit, headlines about coronavirus, etc. And so those types of extraordinary economic events certainly move the markets. And even though you don't know when the next breaking news story might be or what exactly it will be, on key instruments, you can prepare pending orders just waiting for those breakthrough moves. Okay. And obviously, the other type of economic event, the kind where you see the numbers, you know when it will be, you can trade in the direction that makes sense even after you've seen the information. Okay. So we'll do a bit of both of that here in just a moment. If anyone has any questions as we go along or you want to give any input, please feel free to go ahead and do so. I'm happy to share comments and also re-explain things if I went a little too fast. All right, so these are the main headlines I see coming out today and recently. U.S. consumer confidence hits one-year high and house prices are soaring. Okay, so great real estate market in the U.S. all of a sudden. Consumer confidence is up, probably because there's been inexpensive loans. helping the housing industry. There's been stimulus handed out, helping consumer confidence. So, and low interest rates as well for uh, credit cards and other things, as the overall interest rate situation is quite low. And so all of the things that the feds have been doing in the US and other nations around the world have been doing has really helped through this COVID crisis to keep consumer confidence up, to help the economy have segments at least that are doing well, like the housing industry in the US. So there's uh, there's a silver lining here, maybe on the inside of this COVID situation with all the stimulus that's been handed out. Now, the other end of that is when there's so much stimulus being handed out, then why is anyone attracted to, say, government bonds? Why do they need a safe haven investment like a government bond if the stock market's going through the roof and all this free money's being handed out and the indices and the stocks are hitting new highs? Well, everyone's buying into stocks, right? They're not interested in the bonds. So what happens? The banks offer higher yields. Okay. And so when the yields spiked again, and we've been talking about this over the past weeks, when the yields spike to like 1 year highs, in this case, a 14-month high, when the yields, meaning what the bonds will pay you if you buy the bonds, goes up enough, then that creates fear in those who have invested in stocks and riskier assets because they say, ooh, that might stimulate a sell-off. People might say, okay, I'll buy into the bonds, even though those yields don't have as high of a potential as the stock market. They still are now at a 14-month high. And so many people rush in to buy those bonds potentially, or at least get afraid that others will. And so they sell off their stocks. Okay. And so we saw the tech stocks hit by the spike in yields. So as the 10-year Treasury note in the U.S. yields went up as the banks offered higher yields on those Treasury notes, we saw the stock market sell off a bit. Okay, there are parts that have done well, but in general the stock market dipped today. It was in the red most all of the day, and maybe still is. We'll have to take a look. So exactly what we talked about last week has come to fruition. We said just keep an eye on the yields on bonds, and if they hit some type of high, 12-month high, in this case 14-month high, you might, at least in the short term, see that as an opportunity to short the market. And that's exactly what happened here. The tech stocks took a dip. They got spooked by the jump in yields. Okay, another headline: corporations and wealthy pay in the Biden infrastructure plan, not drivers and riders. So the plan now that the Democrats in the U.S. are working on is an infrastructure plan that actually was supported during the Trump administration too. Trump really wanted to do an infrastructure plan in the trillions as well, maybe not 4 trillion, but in the trillions. And but the Democrats didn't want to pass it while he was president. And now that Biden's in there and the Democrats have controlled both the House and Senate, they're giddy to hand out more money. Even though 2 trillion more was just handed out, they want another 4 trillion in stimulus. And so that spooked the markets maybe a little bit today too. Maybe there's some fear about how much is he going to raise taxes on quote unquote corporations and the wealthy. You know, a lot of times it's the wealthy that are hiring people. It's the corporations that are giving people jobs. And so if you go on to read the article, he's talking about raising the corporate tax rate back up to where it was before Trump lowered it, which, boy, could that spook Wall Street if it looks like that could come to fruition at any point this year or in the near future. So how do you pay for 4 trillion in infrastructure spending, which certainly will help segments of the economy, will help you know, those working on the roads, the construction workers, certain industries will get those trillions that are being spent on contracts. But where's that money come from? If that money's coming from the government, well, they're going to raise taxes to maybe from 21% to 28% on corporations, raise taxes on those making above X amount, fill in a number. And a lot of those folks might be small business owners. And so this could be scary for Wall Street. So I think that added maybe to the fears today, not just the bond yields going up, but also this idea of higher taxes maybe being around the corner in the US. And so we saw the US dollar strengthen today. The US dollar strengthened quite a bit. It actually pulled gold down, which, believe it or not, gold's a safe haven against inflation. And so you'd think gold would go up if there's fears of 4 trillion in stimulus being passed out. But the fears of higher taxes kind of counterbalanced that, and folks rushed into the US dollar, pulling gold down today and pulling other instruments down as well. The US dollar's been up quite a bit against other currencies, and obviously then weighs on the commodities and the indices. So that's a big headline going on today too. And if we take a look, we can see everything's red from yesterday into today. The futures were red all day. The volatility index has been up and down, up and down. I think the market doesn't know what to think right now in terms of volatility. But what's been a constant today is the futures have been red almost all day, and the US dollar has been steadily strengthening, up 0.39% now. Okay, that's a large increase for the dollar index, if you're wondering. To go be up almost 0.4%, that's quite a jump in strength. And the US dollar is actually at multi-month highs against different pairings right now as we look at this spike in the strength of the US dollar. And then we look at some of the announcements that came in. There's a consumer confidence we already talked about out of the US. Nothing major anywhere else in the world. Some low-level announcements out of the European Union, out of South Africa, some decent numbers coming in out of Spain. And so that may help buoy the euro a bit, but not so much against the US dollar. I wouldn't see that as an opportunistic pairing. US dollar has had some solid consumer confidence numbers, and being a safe haven currency when there's fear, that naturally was creating strengthening of the USD today as well. And if we look later this evening, actually coming up in about 46 minutes, FOMC member Williams will be speaking out of the US, which when the FOMC members talk, people listen. And likely they're going to come out and try to calm the fears and talk about all the stimulus that could come or something like that, how they're going to help the economy more. And if that happens, you could see gold go flying up, right? Because then those fears of inflation might take over the fears of higher taxes, okay? And so it's a balancing act here. And many times when there's fears of inflation, we may see gold become quite bullish. So those of you that are bullish on gold, today's large dip in gold, you could see as maybe an opportunity to take a shot if you believe this 4 trillion talk and more stimulus spending in the US could buoy inflation fears. Then later tonight, this is a big one. Manufacturing PMI coming out of China. That's at 2100 hours New York time. So add 5 hours for UK time or whatever your GMT offset is. We're looking at -4 GMT in the US, in New York. So, UK time, we're talking like 2 a.m. in the morning. China will have these high-level announcement coming out at that time, and that's one you can count on. It will affect the markets. If it's better or worse than expected, you could see a big move in the markets with the China data coming out, being the second largest economy in the world. Okay, so as we take a look then at our website here, I want to make sure of a couple things. I mentioned AvaTrade Go. Again, it's our award-winning mobile app. If you take a look, you'll see all of the features that are on the AvaTrade Go app are also in the web trader, meaning Ava Protect, which I'll show you real quick in the web trader on a full screen view. It protects against losses for small premium cost. Anyone who's new to risk management, the app and our web trader platform really help with your risk management, not just because it offers Ava Protect, but also if you program a take profit or a stop loss, it calculates your exposure and your potential profit for you. You don't have to do it manually. It's like a trade calculator in your order window. before you buy or sell, you can know exactly what you're risking to your stop loss price, what your potential profit is to your take profit price, and it calculates it into your account currency. And also it tells you the margin requirement as you set up the trade size. It tells you how much is needed to go to margin to open the trade. So everything's there for you within the app. And I'll show you, if you log in from our main website here, you'll be in this platform, which is the web trader. Both the AvaTrade Go app and the web trader trade right on top of the MT4 and MT5 accounts. If you have multiple accounts, you can just click on this tab and go here, and you can switch to your demo. You can switch to other live accounts that you have. They'll all be listed here. So very simple to switch between trading accounts as well, all from within the web trader. Now, I mentioned for risk management, before we take a look at the live charts, to look for some opportunities right now that you might be interested in trading on. What I want to do is show you the feature AvaProtect. So if we take a look at something that offers AvaProtect, gold, silver, and FX pairings all offer AvaProtect. We can see here, if I buy or sell on gold, that it has this shield, which is a symbol that means that instrument has AvaProtect available. Okay, and the feature, you just check the box and you can pick the length of protection you want. It tells you when the protection ends and how much it costs to add that protection. So let me give you an example. Let's say I think I want to buy on gold now. Maybe, I believe over the next couple days, this talk about more stimulus in the US could drive gold up. If I believe that, and I'm not saying you have to believe that, it's just an example, but if you believe that, based on gold being an inflation safe haven, then maybe you say, okay, I'm going to do 10 ounces of gold. I want my stop loss. Maybe you think gold won't drop below 1650. So maybe you say 1645 for stop loss. And I look and I say, wow, I'm risking over $400. Just calculated my exposure right here instantly. So it's telling me over $400 I'm risking. And maybe I say, yeah, it's too much. I don't want to risk that much. So perhaps I think in the next couple days, there'll be a big move back up. And so instead of putting a stop loss, maybe I use AvaProtect. And I say for a certain length of time, maybe I say a couple days, I want to protect with AvaProtect. Look, it only cost me $82.80, not 400 and something that I was risking to my stop loss. So I can say for $82, if gold goes up even $9, if I have 10 ounces, if gold goes up $9, I make more than what I'm paying for the protection. It's only a $9 climb. It could go up $50 or $100 in a couple days, right? So because there's FOMC talk tonight, there's the China announcements, and there's talk about stimulus in the trillions again in the US. Maybe I say, you know what, I'm going to pay for this protection. I'm going to buy 10 ounces. I'll put my take profit, maybe $50 up. So if I say the price is 1686, maybe I say somewhere around 1730, something like that. If I put 1730, if I can type it properly. There we are, 1730 for a take profit. Now I might say, okay, look, I can make 435 if it hits my take profit. The most I'll lose in the next 2 days is what I'm paying for the premium. And if I like that idea, then I buy on it. Okay, it's that simple. So now I've got my position. I can look at the profit and loss. If I want to look at the details, I can look. Here's how much the protection cost me, $83.01. The time remaining, 44 hours and 39 minutes. If after this expires, I'm $1,000 in the hole on my move, when the protection ends, I get all of that added back to my account. All I'm down to the premium. If it goes and I make $1,000 or $500 or $400, all the profit's mine. That's it. That's the way this feature works. So it's a very nice feature. And if you combine it with fundamental analysis, you don't have to be exact on the entry. It might go the wrong way for the next 12 hours, then go the right way. If you combine it with fundamental analysis, you've got a pretty wide window there, up to a couple days protection even, that you could end up on the positive side potentially. without having to risk much. In this case, $83 or so for 2 days protection, which is a lot less than I would have risked to my stop loss in that situation. Okay, just make sure you manage the trade after the protection ends if it's still running, because you can get a payment from the protection and the trade can still run and go up into profit or go the wrong way. So you'd want to manage maybe with a stop loss after that, something like that. Type OK if everyone's with me, or if you have any questions on how that feature works. Now's a good time to ask before we move on to the live charts on the MT4. Okay, looks like we're good to go. I don't see any questions here. Everyone seems to be okay. By the way, on the WebTrader platform, if you have a live account, and if you don't have a live account, I would say get one. At least put the minimum deposit in so you can see all the features. You've got Trading Central. All of these features are active on live accounts. And so if we go to something like Market Buzz, you have your fundamental analysis done for you. Okay, all those articles I found and showed you over here, you could just come here to whichever instrument you're interested in. And the big movers today have the biggest bubbles. And remember, we saw the headline that the tech stocks dropped with a large pullback today. So we see Microsoft, Amazon, Apple, etc. Okay, if you want to see, well, what articles are going on with those today, then you click on Microsoft or whichever one you're interested in, and here we are. Here's articles that have those instruments within the articles, and they came out in the last 37 minutes, 41 minutes, etc., in order that they came out. Okay, so, and this is actually not Microsoft, I'm sorry, Morgan Stanley. It's Morgan Stanley, and the banks were moving today too with the yields that went up. So this is stuff that mentions Morgan Stanley, and if we go back, we can also bring up JP Morgan. So those two bank stocks were moving today, and we've got Amazon here, 237 articles that have recently been posted. And so you can pull up on any of these instruments and see what's the big news that's going on with those instruments today. And so let's take a look at the live movements on the MT4. I'll jump on my demo here, and let's see, maybe there's some opportunistic entry points based on what we know fundamentally in the markets today. I'm looking at 4-hour candles, and look at this drop off from the highs. So we could see on the 4-hour candles with our technical analysis resistance here. It hit and dropped, hit and dropped. Way earlier this morning, it hit and dropped. It's been dropping all day, right? Now we find a support level on the 4-hour candles right about here. So you might say, okay, maybe now's the time to take a shot at buying on the S&P 500. Why? Because they're talking about 4 trillion in stimulus, maybe. The talk about maybe raising taxes on corporations, that didn't help things out. But the talk about stimulus, maybe it does. So you don't have to risk much to get below this support level. And your potential profit can be before the high that it already was at up here, not that long ago. So I can put my take profit at a reasonable spot that it doesn't have to hit a new high or something. And if it climbs even to where it was earlier today, you have a nice profit. And the fundamental news seems maybe to have calmed a bit, all the fear about maybe the yields being higher than expected out of bonds and the fear that that could cause a sell-off. Well, there was a bit of a sell-off. Down went the market. But guess what? The housing market's very strong in the US. We just saw that economic data, right? The consumer confidence is through the roof in the US. We just saw that report. So the fear about high taxes, you know, that's something for the future, isn't it? It was maybe an overreaction because the taxes weren't raised yet. They're just talking about maybe that's what they'll do if they can pass this $4 trillion infrastructure deal in the US. They haven't even started really negotiating anything. So You know, this is a situation where maybe the fundamental news created an overreaction of something that hasn't occurred yet, and it's an opportunity maybe to get in at a nice entry point. With the actual fundamental news that came out, housing data, consumer confidence being better than expected by quite a bit. So this is a situation where maybe the fundamental news both helped you get an overreaction in one direction, but can help the market go back in the direction that it came from as well. So there's no guarantee, right? So we put our stop loss at a spot that risks an amount that's acceptable to you, and you go in the direction with your take profit that you think fundamentally the news tells you makes sense. Okay, and that's pretty much it. That's the setup on something like the S&P 500 today. And if we're looking at the Footsie, we can see that there wasn't as much of a pullback in the Footsie. And if we go in like 15-minute candles, we see it's up. It's reaching resistance levels on the Footsie. Okay, so maybe that's an indication that U.S. stocks could follow the European stocks up. Okay. Ionis, I'm happy to hear that. I'm glad that you're enjoying AvaTrade Go, and the analyst views are also good. I agree. The analyst views give you some nice technical signals on the web trader platform. They're actually, for anyone who doesn't know, there are free signals. Let me show you real quick. I'm glad you brought that up. Because we're talking fundamental news, I didn't show the technical signals. But if you go to this same tab, go to Trading Central. If you have a live account, you click on Analyst Views. It breaks down the technical analysis, the direction of the breakout move that's expected, the price levels of support and resistance. Everything's here for you. It's on cryptocurrencies. It's on FX, majors, minors, etc. Okay, exotic Forex, all kinds of signals, time-stamped coming in all through the day. So I agree, that's a nice feature, along with the other features there from Trading Central. So we see the market trying to bounce up for us on this S&P 500 move. You scalpers might have already closed, but I think maybe a little patience for that to rise a bit further could make sense. So it's always nice to look at instruments that are typically related to each other, like we're looking at the Footsie being near the high of the day, and the S&P 500 being near the low of the day, and looking and seeing that the fundamental news makes more sense for the direction that the Footsie went, and less sense, at least in the short term, for the direction that the S&P 500 went. And so then you pick the direction that makes the most sense to you fundamentally, and make sure you have a proper technical setup with the price levels so that you're risking the amount that makes sense and going after a profit that is worth it to you. So let's take a look at crude oil maybe. And it makes sense, doesn't it? Crude oil pulled down when there's fear in the markets, right? That makes sense. That's what happens with crude oil. When there's fear about high taxes and high yields on bonds, and there might be a sell-off in the market, and people have these fears, oil tends to drop. It's something that makes sense. Now, if we look and we say 1-hour candles, we see a support level here. Not a major support level. There's actually a more major support level down here. Okay, this is a better support level, a better price, where it hit and went flying back up. Here it held twice, once back up, twice back up. Seems like it still might want to challenge the support level. What kind of pending order could you put in if you thought, okay, maybe oil will pull down a little further before it climbs? And if you think potentially that it could come down further, then go back up, what kind of pending order would buy from down here? What kind of pending order could we program to buy from, say, 59.5 if you wanted to buy from a little bit lower price than it is now? I'll walk you through it. Crude oil, if we've got good housing outlook, great economic consumer sentiment in the US, we've got the Footsie at a high near the day, we're looking at maybe some momentum. We think, okay, maybe oil goes back up now after the fear that hit the market today. You could say, first of all, you could buy market price, right? I could go and say, okay, maybe I do a quarter of a lot, buy now. Okay, fine. I put my stop loss below not just this support level, but below the more long-standing support level down here. So I'm risking about $1 per barrel. Okay, stop loss is about $1 per barrel down, and my take profit, I could make about double that if I put it before these highs up here. Okay, it only needs to reach less than the high it was at just a little while ago, and I would take my profit with more potential profit than what I'm risking to my stop loss. Then I say, but I know it could push down a little further, maybe before it goes up. And so if you think it'll go up, so then maybe you say, let me do a pending order as well. So you say buy from a lower point if it drops lower. So pending order, that's a buy limit. There's 4 types of pending orders. Buy limit, buys from a lower point. And maybe I say if it hits 59.5, I'm buying another entry on this because it's a better price than the first entry that was attempted in the simulation. So 59.5, I might say I want my stop loss $1 down from that, so 58.5. And maybe my take profit up by this one at 61.7 or so. Not 617. Let's get that right. I don't think we'll ever hit 617. Okay, so there's my pending order. So now I have a pending order down here that if it hits just above this next support level down here, it buys again. My stop loss is $1 down, further down than the stop loss on the first one. So I can re-enter and have both trades. If this support level doesn't break, then I can have 2 trades that could go up and profit up here. If it breaks the second support level, I'll get out of the first one, cutting the risk in half at that point. And as long as it doesn't hit my stop loss down here, it still can recover and go up and give me an overall profit on the 2 trades, even if the first one gets cut out. Okay. And if the first one goes the right way, then okay, I never had to enter on the second attempt. So this is how this is set up here based on the fundamentals of the day, trying to take advantage of the fear causing a dip in the commodities and a dip in the stock market, then looking at the actual economic data that came in and hoping that that's enough to push the market back up, at least temporarily. Any questions on crude oil or anything else? And by the way, they're still working on getting that ship out of the Suez Canal. The last headline I read is that they had some success and they've been able to float it a bit, and maybe they're getting it open now. That's been quite a debacle there. Any questions on crude oil? Okay, great. Let's take a look then at maybe gold. It's an interesting instrument to look at right now. With you can see the crash that gold has had this week. Okay, in the past couple days, these are 1-hour candles. We see gold pushing down. What do you think could happen? And many times, when you see the more rapid a movement in one direction, the more likely sometimes you can have a snap back in the opposite direction, a correction. Okay, otherwise known as a correction. So, yeah, that's what we set up on crude oil, Vivian. We set up a pending buy limit, which buys from a lower point. So if the market on oil drops another dollar or so, or whatever distance it was to our entry on that buy limit, then it'll buy from that lower point. So buy limit, no matter which instrument you're on, works the same way. To buy from a lower point, you put a pending buy limit. If you're doing the opposite, maybe you think if the support level breaks, you want to sell because that means there was really bad news and you think it'll keep dropping. Then that's a sell stop. Sell stop sells from a lower point. Okay, so if you want to sell in the downtrend, that's a sell stop. Catching a movement that already went down and broke a support level at a price that you think that means it'll keep going down, program a sell stop at a lower point then. a buy limit at a lower point buys from that lower point. So usually the buy limit is programmed to buy from above the support level before it breaks, meaning you don't think it'll break, you think it'll go back up. The sell stop, you back up the buy limit perhaps with the sell stop below the support level to sell if it does break that support. You get out of the buy then and get in on the sell in that example. Okay, but we've got a buy limit on crude oil set. Now, the idea here with gold, you'd say, okay, looks like it's consolidated, right? We've had some consolidation on gold now. By consolidation, we mean it's going sideways, right? Look at that. The market plunged and now it's tightened and gone sideways. Eventually, there's going to be a breakout one way or the other, right? Perhaps you say 4 trillion in stimulus talk. You know, again, stimulus talk in the US in the trillions, which is a mind-boggling number to begin with. Even 1 trillion, and we're talking 6 trillions already been handed out, and now they're talking about 4 trillion more in stimulus. Maybe you say this is an opportunistic spot on gold, even though you know gold could drop more, absolutely could drop more. You say, okay, let me take a shot. I'm going to buy on gold for an amount that makes sense for my risk tolerance. You could do like we did in the web trader and put Ava Protect, okay, for hours or for days. You can put protection with Ava Protect. Or if you just prefer the old-fashioned stop loss, a different way of risk managing, then that's fine. You can place your trade from the MT4, MT5 account. Now, in the bigger picture, if I go to 4-hour candles and I say, okay, I want to get my stop loss below a significant support level. So I go to 1-week candles and I say, here is a support level. Okay, 1-week candles. You see the candles on 1-week candles, hit here, went up. Hit here, went up. Here's the support here. It got near it and bounced up. Now it's near that price. It's not to it yet. The support's around 1668. We're at 1685. So we're talking another $17 or so to that support level. So this is a more patient move. $10 the wrong way on this move in gold, you're not giving up, right? It's a longer term move if you're using the 1-week candle support level. So I'm putting my stop loss here below the 1-week candle support and saying it's time maybe for a correction in gold after all this stimulus being handed out. There's an opportunistic drop in gold, which is the opposite of what you'd expect with the fundamental news that we're looking at with trillions of stimulus handed out. Gold's a typical safe haven for inflation fears, and there certainly are inflation fears starting to kick in. So we could then say, take profit up here, maybe before this major resistance around 1750. So I've got a take profit about double the distance of what I'm risking. And I don't even need to break the major resistance level on the 1-week candles. I can take profit before the major resistance, and still I have a potential profit of about double what I'm risking. And I've got my stop loss below the 1-week candle support level. So technically speaking, even if you weren't looking at fundamentals, pure technical traders might like this move. If you add the fundamentals, maybe the move makes even more sense. Okay, it could make a lot of sense actually, because the risk reward is a nice setup and the fundamentals are on your side. Potentially, if you believe the talk about 4 trillion in stimulus could create inflation fears. Any comments, questions before we end things? Because we're about 40 minutes into the session. I think we've covered enough in terms of what's happening with the fundamental situation. We all understand there was fear today, especially with talk about higher taxes on corporations and also the bond yields spiking up. We saw what happened with that fear. The markets pulled down. And now you have to weigh the situation and say, what do we think happens next? And so we're trying to read the tea leaves that maybe we get a bounce back up. Maybe the fundamentals are really not that bad right now because after all, there was not more taxes enacted yet. You know, it's just talk about something that could happen in the future. And the actual data shows good consumer confidence, good economic data out of the European Union as well. We saw with the Italian numbers, etc. And so it could be an opportunistic spot to get in after a dip that maybe was an overreaction. Any questions, comments before we end things? Okay, John. I was reading your username there, but good. I'm glad you gave me your actual name. Okay, everybody, great. Good luck with your moves. I think the ones that we enacted here have a good shot at some nice potential profits. They're bouncing around a little as expected, but I think they could be trending maybe in the right direction. Just cover your risk on the downside and go after what you think the fundamental news says makes sense with the entry points that make sense for you, technically speaking, maybe like we were looking at here. All right, everybody. Bye for now. Good luck trading this week. We'll have another session this Thursday at 11 a.m. UK time.